Hi, welcome back. The market's looking good, so about 0.5% higher on the frontline indices. The Sensex is up 200. So let's take stock of what some of the companies are doing. Take Solutions is a stock that's on our radar. It's not had a great start to 2018, but a recent brokerage note suggests that investors are quite upbeat about the prospects of the company capturing a bigger share of the life sciences drug discovery spending. Srinivasan H R, the Vice Chairman and MD, now joins us on the telephone line. Mr. Srinivasan, good afternoon. Thanks very much for speaking with us. So this whole repositioning that this brokerage seems to be talking about, it looks to be working. I believe life sciences is now showing what, a 25% top line growth. How much more have you targeted? I mean, what's the total pie that you're looking at?
See, the life sciences R&D services business, it's a fairly large market at about $35 to $40 billion. And at the moment, for the first 9 months of the year, in dollar terms, we've grown our life science business at 30%, and in rupee terms at about 25%. We have a very healthy order book, which for the life sciences business alone stands at about $151 million. And we expect this growth trend to continue over the next several quarters. So on the life sciences business, certainly the company feels very buoyant that we are in the right space, have the right credentials and capabilities.
So what is the difference in business between US and Europe in terms of, what the contribution is? I ask because I believe the margins in the US are higher.
Yeah, traditionally, it is not only for our business. In most businesses, you will find that the margins in the US are higher. There is a value pay that happens in the US. And the buying environment in EU is a bit conservative. And you can have as much as 5 to 7% difference on the same services on the margin front.
Is that why you're looking also at some acquisition in the US? I mean, can you tell us what's the update?
Yeah, see, the US acquisition, we are looking because we want to enhance or strengthen a clinical footprint in the US. Currently, we have only the regulatory and the safety footprint. And clinical is the largest piece, so we want to enhance that. And we're looking at acquisitions in the US. Traditionally, the US market is the largest pharma R&D market. So it's very important that we are present there. And even geographically, 81% of our revenues come from the US. So we are a fairly US-centric company. We just want to be strengthening our clinical presence, and we're looking at doing that through an acquisition.
Okay. So what is the update in terms of the fund utilization from your recent preferential allotment? Yeah,
well, the issue got done just last week. So we are keeping this for doing the acquisition, and that's the intention of the fund.
The entire 250 crores, right? Any debt on your book?
See, our net debt is about 0.1 to equity. So, and we are leveraged outside of India, so we don't have any rupee borrowings as such. They're dollar-denominated borrowings and paid for by operating margins.
Right. Mr. Srinivasan, hi. Good afternoon, Prashant here. If I look at the stock, the Take Solutions stock, I mean, it's basically, it's doing well on the day-to-day, but it's at the same level it was 3 years back. We've had a big bull market, and all kinds of businesses have been re-rated, especially smaller companies. What is, in a way, how do I put it? I mean, I know you run the business and not the stock, but is there something which, according to you and your understanding, is worrying investors? One a concern which the broker, which we're referring to, highlights as high receivable days and things like that. I mean, cash conversion seems to be a problem. Could you talk about that?
Yeah, first, of course, I don't track it on a 3-year basis on where we are doing on the stock. And like you rightly said, our job is to run a very efficient business. And on all parameters, we have been efficient. Now, before I come to I just want to maybe give a clarification on the receivable days. We reflect the pharma industry receivable days. So whatever is the pharma industry average, I think we are very much there. So it can't be that one portion of the pharma industry alone shows different receivable days. The key issue on our communication to investors, and we're putting in a lot of effort to doing that, is ours is not a business that can be easily understood, because you need to understand the pharma R&D life cycle. So many times we are perceived as an IT company, which we are not. We actually do core clinical research, we do regulatory submissions, we do safety monitoring. So we do very high-end work with medical science. So it is at the confluence of medical science and technology. And I think we need to message that a little more effectively.
Right. Just one quick point. What is the split now between clinical research and the other stuff? I mean, this was 3 or 4 years back. Back then, clinical research was not that big a portion of your revenues. Yes.
So today, in the last quarter, 89% of our revenues came from the life sciences vertical, and 11% from the supply chain. And we believe that we'll be able to sell the supply chain business very soon. So our intention is to be a full life sciences company. And I think that would impart a lot more clarity to...
Sure. No, I meant within life sciences, what kind of work? I mean, if you could give us that split.
Yeah, so on the clinical side, currently we do about 40% of our work on the clinical side, 40% on the regulatory, and 20% on safety. But as we move ahead, you'll find the clinical side becoming much stronger. It may tend towards 60-70% over the next 3 years.
Fair enough. Mr. Srinivasan, thanks very much. Appreciate you joining us with that, with those comments, and look forward to speaking with you again. So that is Take Solutions. Stock's up today, about 6% odd, 6.5% actually, 163, 164. We'll take a very quick break.